NIO's earnings are about to come out tomorrow, and there are three massive things that you must know, otherwise you might be caught off guard. And all three of them happen in Q4 of 2023, which will impact the earnings report that you are about to see tomorrow. So each one of these are super critical. So first of all, back in November, NIO did a 10% to 20% staff cut, job cut, if you guys recall this correctly. Now, at certain departments, it was up to 30%, but when everything was done and the dust was settled, it was reported by certain media outlets that the total number of fired employees from HQ was around 3,000-ish employees. But the biggest thing was severance pay. Now, severance pay is quite interesting. Usually, people get paid N+1. So N represents the number of years you've been working at this company. And then if it's less than 1, it's still just 1. And then plus an extra 1 month of salary. So if you've been working at this company for 2 years, you get 2 plus 1. So you get 3 total months of bonus salary for your severance. Now, NIO has an absurdly godly number of N+3 severance pay for their employees, which is just a huge perk. And even the people that got laid off, they were quite happy, because that means even if you just worked at NIO for 1 year, you got paid 1 month plus 3 months, so 4 total months of extra salary, and that's just absolutely insane. And some of the older employees, you can imagine, if you worked at NIO for 4 or 5 years, you are getting like many months of salary. So this will definitely have an impact on the earnings report as a one-time expenditure. But this does mean that in future, of course, expenses are going to be lower because those jobs aren't there. So that is the first thing to pay attention to. Now, the second thing to pay attention to is, of course, the factory. Now, if you guys recall correctly, NIO bought back the factory that was previously owned by JAC. It used to be NIO paid JAC to build NIO's cars, and NIO essentially bought the factory and all the assets back using straight up money. Now, how much money did they pay? Well, they paid 3.18 billion RMB, which translates to about 438 million US dollars. So that's a one-time payment, and they bought the factory back. And the good thing is, of course, you no longer have the JAC badge, but you also improved the cost of producing a single vehicle by 10%. All right, because you used to have to pay that to JAC. Now you don't have to pay that. Remember, this is not margins. This is just the cost of producing a vehicle. It's optimized by 10%. So that's pretty good. But of course, another big, massive expenditure right there, 400 million. All right, quite insane. So we might see a big surprise right there. And then the other third factor, which is a very good factor, is, of course, we all know, the investment from CYVN, the 2.2 billion US dollar investment from CYVN. That is basically a big cash injection into NIO that is really going to boost their cash position. So when you guys look at the report, investors look at the report, and they see a massive boost in cash reserves. That is very good. All right. But if we look at the numbers from Q3, all right, so in Q3, they had a loss of 663 million. Yeah, quite a substantial loss. Most of that came from R&D expenses, which was about 416 million US dollars. And what are they researching? Well, of course, into next generation vehicles, into 3.0 ET9 stuff, and vehicles beyond that, game-changing vehicles, of course, and then also development for the development of swap station network, charging station network. So that's what they're developing on. And the CEO has said that they are not cutting back on R&D expenses. So that means that we should not expect R&D to drop by too much. I personally am expecting it to drop a little bit because they've done most of the R&D work for ET9 and NT 3.0 vehicles, so I don't see where they can spend more money. But of course, they're still placing more swap stations and stuff, so they are definitely still spending. So around 400 million again, R&D expense, but probably a little bit less, maybe 390 maybe. I hope it's less than 400 million in R&D expenses, but yeah, probably another 400 million in R&D expenses for the earnings report that's going to come out. Now, for revenue, in Q3 they did 2.6 billion, 2.6133 billion US dollars in revenue, with 55,432 vehicles delivered. So if you do a little bit of an extrapolation of how much revenue, and this is total revenue, by the way, how much total revenue per vehicle, and then you multiply that by the deliveries in Q4, which was 50,045, which was 5,000 less, 5,400 less than Q3. Quite crazy how it's less. Q4 should absolutely be higher than Q3, but it wasn't. So that comes out to about 2.359 billion estimated revenue based on the deliveries. So that is actually almost 300 million less than Q3. So we could see a possible drop in revenue quarter over quarter. It's absolutely possible because you're delivering less vehicles in Q4 than Q3. So you could see revenue drop over there. Now, one of the possible big surprising hiccups that things that could affect everything and change everything, right? Because what I've told you right now, all these things that have already happened, they're pretty big cash expenditures, right? If you add on the factory 400 mil plus R&D 400 mil, that's like 800 million right there, right? And then you add some severance pay, you add maybe some other surprise things. Yeah, we're getting close to $1 billion in losses. That's quite hard to stomach. Now, keep in mind they're expanding into the UAE, which is very good, but I think the biggest surprise thing that might really impact everyone is the partnerships and whether or not they're getting any money straight up with the partnerships. Possibly a lump sum payment, which wouldn't really exact to too much money. But I mean, if they really shed more light onto the partnership and what kind of revenue they're going to expect from that, that could be a big game changer in the earnings report. It's also very possible that the big cash reserve that NIO has is going to be a very big boost to the earnings report and really surprise people that they have so much cash in the bank. So that could also be a big benefit. But overall, it seems like the things that happened in Q4 all costed a lot of money. If you look at the what NIO is doing right now in terms of deliveries for January and February, Q1 outlook probably isn't that much better, to be honest. Okay, so go into this. I want you guys to really understand the things that have happened in Q4, all right? The factory purchase, and then the layoffs, and then the investment from CYVN, and then also R&D expenses probably not coming down that much. And be prepared, all right? Be prepared, and don't be too surprised if you see like some very big loss number. And the loss isn't going to be like super long sustained loss. Like it's a one-time loss, all right? It's not going to happen like every single quarter. They're not going to buy a factory back every single quarter or lay off people every single quarter. No, but totally be prepared for the possibility that some investors that don't watch my videos might get spooked by the amount of money that they spent in Q4. All right, so just keep your heads up, be aware of what's happening, and don't get punched in the face. Know that they spent this money. It's all for a good cause, all right? It's all for a good cause. They had to do it. It's going to make their numbers in the future months, future earnings report much better, okay? It's all necessary cost-cutting measures to get to profitability, to get to where we all want NIO stock in the triple digits. We're going to get there. but it's going to take a long time to get there. All right. As always, stay safe, stay healthy. Peace out.